Good morning, my name is Shalina Begum. I'm the Northwest Business Editor here at the Business Desk, and welcome to our latest webinar in partnership with Alexander & Co, in which we are going to explore what's next for cryptocurrency and how to avoid its potential pitfalls. As you all know, there are thousands of different types of crypto assets out there. You've probably heard of a few: Bitcoin, Ripple, Litecoin, and Ethereum have all been mentioned in the news recently. In fact, the value of Ether, the second largest cryptocurrency after Bitcoin, rose to record high levels on Friday just gone. They exist electronically and use a peer-to-peer system. There is no central bank or government to manage the system or step in if something goes wrong. Some people find this appealing because they think they have more control over their funds, but in reality, there are risks. So what are those risks? What to do about them? What happens if you make some money on it? And what is the future of crypto? Will all be explored by a great panel this morning. So I'm going to go around the panel and ask everyone to quickly introduce themselves before we kick off. And I'll start off with you, Jim. You're the first person on my left.
Morning, everyone. Thanks for having us. It's Jim Trescott. I'm a corporate partner. I head the corporate and commercial team here at Beyond Corporate. We specialize in advising all sorts of medium and large businesses and business owners on all aspects of commercial and corporate work. And we've had a lot of crypto inquiries and work to do over the last 12 months.
Thanks, Jim. And Alex.
Hi, I'm Alex Savage, Independent Financial Advisor at Pareto Financial Planning. Most of our clients tend to be owner-managed businesses, individuals as well. We don't obviously get involved in crypto directly because it's not something that's regulated for us to advise on, but it's certainly something that a lot of our clients now are asking questions about and wanting advice on, and it's not something we can give. So it's been an interesting area for us for the last couple of years. And watching the path of the investments that people have in crypto. So it's an interesting panel today.
Thanks, Alex. And John.
Hi, I'm John McCaffrey. I'm a tax partner at Alexander & Co. We are doing an increasing amount of work in the crypto space because there is currently a lack of knowledge around the tax treatment of various crypto assets, with number of people going from the point of thinking it's not taxable to others having entirely the wrong structures in place for their investments. We deal with entrepreneurs, owner-managed businesses, family businesses, and that includes now a large number of people in the crypto space.
Thank you, John. And Gary.
Hi everybody, I'm Gary Woodhead, CEO, co-founder of CurveBlock. We are a centralized finance startup pioneering what we deem as the shared economy. So we're using DLT to effectively make the public the financiers and beneficiaries of the construction sector. We've done a private round and it averages just over 30% per annum return. And the way we make the profits are through the construction and sales of net zero energy positive houses, so houses that don't use fossil fuel and also produce more renewable energy than they consume.
Thank you, Gary. And moving on to Keld.
Hello, everyone. I'm Keld Van Schraven, co-founder of KO1, which is a PLC where we trade the London Axie Exchange, and we're an early stage investor in decentralized projects. We've been investing since 2016 and supported many of the early stage foundation projects of the crypto space. So anyone can own a share in KO1. You can put your shares into an ISA, KO1 shares into an ISA. Current market cap is about 200 million. We started with 300K, so it's been quite a wild ride, as you can imagine, navigating the rapids of crypto river. So yeah, good to be on.
Thank you, Keld. And finally, Josh.
Hey everybody, my name's Josh Redette. I run and own a company called Easy Crypto Hunter, and we now pretty much, if not the biggest GPU mining, cryptocurrency mining hardware provider in the UK. So rather than kind of chase Bitcoin, we kind of advise people the more profitable ways you can go about cryptocurrency mining by mining all the altcoins, things like Ethereum, of course, and everything else. So we specialize in manufacturing the kit here in the UK and then distributing that to business owners, individuals, and giving them the full service to kind of help you get on your journey from start to finish in the still rather very profitable world of crypto mining.
Thank you, Josh. just to let our participants know, there is a Q&A button, so do feel free to ask any questions. I'll keep an eye on it and we'll put it to the panel as we go along. I just want to quickly just ask you guys, what's happening with the crypto market right now, because there's so much in the media. It's been quite a busy year for all of you guys. So if maybe Kel, you can explain just what's going on in the market right now, and why is it sort of up and down at the moment?
Yeah, I mean, crypto markets are by nature volatile. That's a feature of it, because you've got dynamics of it which are unique. It's 24/7 liquid, and you can trade very freely for very low cost. So people love to trade these assets, and prices can move on a tweet. So we're getting to a kind of situation where we're starting to understand the crypto cycles a bit more. Bitcoin has a halving event that kicked off last summer, and there always tends to be a sort of market movements after that. You combine that with other factors such as wider adoption, more participants. I mean, there's many more people in the space now than there was when we started in 2016. Even I went to ETH Lisbon conference last week and didn't recognise 90% of the people there. So we haven't had a conference for 2 years, and just in the last 2 years, there's been a massive influx of people. So you've got crypto cycle, a lot of new people coming in just through the kind of educational side of people finding out about crypto. And also you've got institutions coming in to support more heavyweight investments, and just stable coins weren't a thing even 3 years ago. That's just made it much more possible to kind of risk off on investments and use crypto in a more kind of structured way. And you've got other booms that have just promoted crypto, like NFTs. Just spotlit crypto. So I mean, you've got several facts at work here, and also you put on the kind of meta level of it, you've got the collapse of our economies with COVID, and also the sort of unrelenting money printing that's going on. People are just very worried about what's going to happen next. They're looking to technologies that could potentially kind of save their kind of potential collapse, that's something we're talking about. So I think all of those are, it's kind of a unique situation that we're in, and crypto is made for a crisis. It was created in 2008, obviously, so it's made for a crisis, and we're in a crisis now, and crypto seems like a perfect technology for people to be kind of getting interested in right now.
And it's been made, it's in a crisis. And is it one of the reasons why during the pandemic, maybe a lot more people were at home looking at their money and thinking, what do I do with it? And that's probably pushed it a bit more. Would you say?
Yeah, I think that's part of it. I think people are online. We live in an online society now. I don't think that's potentially so much of it. I mean, famously, Ruffer Investments dumped all their crypto because they thought the pandemic was, people coming out of lockdowns, which is quite funny. So I don't think that. I think it's more, we're in an online society now. Everyone's online. Information was instant through the web, and now money and finance is becoming instant. And it was just a missing component in our online society. Cards and kind of current infrastructure, financial infrastructure doesn't fit online. It's a whole lot of kludges and plumbing that just doesn't really fit into the internet. Crypto is the natural liquid financial assets of our online society, and they're just going to be the dominant financial instrument in the next, for our lifetimes. And it's because we are online. If we weren't online, crypto wouldn't be a thing. And crypto is just slotting. It's like water flowing around water pipes on the internet. It's just made for the internet, and it's just made for the way we're living our lives. And it's much more secure. These crypto assets are secure networks, and you've got to have security if you want to trust an asset that you can't touch or see. So, you need the most secure crypto network in order to trust it, so in order to use it. And that's what foundational work has been put into up to today. Satoshi Nakamoto's white paper outlined this kind of trust network and the security around it, the kind of mining around it secures the network. We've got a different type of mining now, which is more of a proof of stake, it's called. It's more of an environmentally friendly way of doing it. It's more collateral. You put collateral up in order to secure the transactions. That's all moving nicely into the next kind of phase. So I think, the time is right. I mean, it's going to be people, the fact there's 130 people on this Zoom now. 2 years ago, there might have been 20, in another 5 years, there'll be 5,000. It's going to be of a size of magnitude. Everyone's going to be using crypto. They won't really know it, but they will. There'll be national stable coins, there'll be an e-pound, an e-euro, an e-dollar. That's all coming down the pipe, and it's all in research. And people like in the kind of current structures now are just slagging off Bitcoin and whatever. It's existential threat to them, but they're secretly doing their own research to strip out the technology. They don't want the censorship resistance of these technologies. They just want the cheaper, faster, quicker implementation of it to save money, speed everything up, and bring it into an online environment.
Thank you, Kel. That was really interesting and a good overview of the market at the moment. And I know you mentioned mining, and Josh, can you just tell us a bit more about what you guys do and how the mining works? And you said you've had a busy year, and why do you think that is?
Yeah, so just followed on, quite nicely from what Kel said there, is ultimately, people often think, even with the internet is the example that I always give. We're here talking on the internet right in front of us, and people just kind of presume it's this non-tangible thing, but actually somewhere, Zoom, the company that we're using now, will have warehouses full of computer servers which are physically given the back-end infrastructure to make this call happen. And similarly in the cryptocurrency world, in order to move coins from one address to another, particularly on some of the bigger networks like Bitcoin and Ethereum, it requires physical computational power to verify one address, verify the other address, and move the coins between the two. So as these network and ecosystems grow, we just need more horsepower to be able to move all those coins around. And ultimately, that's what my business specializes in. We manufacture and sell this equipment. So effectively, in very, very simple terms, anyone that owns a mining machine or a rig, as we call them, a mining device, you can basically get paid a thank you for providing that computational power. So it's not rocket science. People think it's this magical, mythical thing. And, how the hell can you buy a box and plug it in and turn it on and it pays you every day? Josh, that's crazy. But that is the reality of what happens. Just the same as anyone who's got a website, any business owners watching this have probably been paying web hosting for their website for 20, 25 years. The concept of renting out computational power is not new. It's just kind of taken a different turn in the crypto space. And there could be lots of, very interesting advantages towards that. And again, another, some of the big misconceptions that come with this is that, it's really bad for the environment. It uses loads of power. It's a horrible thing, and there's many ways to answer that question. But ultimately, compared to what is always the first one, you don't see anyone getting upset because we chop it down trees to print cash, or the current power that's consumed in the modern banking system. But more than that, now a lot of mining across the world is now being forced on renewable energy infrastructures, and actually there's an awful lot of unused power in the world that doesn't make it from the power factory to the grid because of getting it down the cable in the middle can often be very problematic. So crypto finds its way to aid in a lot of these problems, and actually there's a much more nuanced dialogue surrounding the whole place for crypto mining than a lot of people think, and that's really been where the business has moved this year for us. And again, we now work with lots of farmers and lots of power production facilities and people who, again, a few years ago, as Kel was alluding to, wouldn't have even known what Bitcoin was. But now as that education increases, people are finding a myriad of uses for this, be it for personal investments or for business investments or other ways to diversify incomes. Because again, the current monetary system is changing very quickly, and people want a slice of the pie for what's coming in the future.
Yeah, and are the concerns, when people are dealing directly with you about security, how safe is it?
Yeah, I mean, the security is really very good. I mean, ultimately, the machines which we produce you know, just connect to mining pools, usually on custom Linux servers. So again, all of your coins, you know, go straight to your cryptocurrency wallet. So ultimately, as long as that wallet is secure, which I'm sure everyone else on this call will have some input on, you know, you can keep those coins really very secure, be it through, you know, proper passwords or, you know, ledgers and keeping your private keys offline, or whichever way you want to do it. But ultimately, you know, the machine itself doesn't hold any coins. It just does the processing and then pings those coins to whichever wallet you desire. So it's equally as safe as every other type of mechanism of storing crypto.
Right, thank you, Josh. Gary, can I just move on to yourself? So you founded the business in 2016? 18, sorry, yeah. So it's a fairly new business in an area that, you know, people have got a lot of interest in, although, you know, as Kel said, it's not something that's been around, it's been something that's been around since 2008. Just tell us a bit more about the business and how it actually works, and, you know, the sort of, you know, the investment side of it. How do people sort of make money on it, and, you know, and how you use tokens as well?
Yeah, so effectively, if you look at the traditional world of real estate investing, a lot of ventures are done where you have a high net worth individual and a developer. And effectively, the high net worth will use his cash. The developer will build the site, obviously sell the site, and share the spoils. So take that model of two parties dabbling with multi-million-pound real estate developments, but instead of that being one high net worth, you make that thousands and thousands and thousands of people, public, white collar, blue collar workers, and you effectively fractionalize the ventures. And there's several positives by using blockchain for this. You could do it without blockchain, but with blockchain, there's extra bonuses. So you've got a transparent, immutable ledger, which is fabulous when you effectively going to be regulated by the FCA. It has liquidity ability, so people are no longer locked in their investment. If they need to sell, they can peer-to-peer that digital asset to another buyer, which you can't do in traditional world of real estate. And because you're fractionalizing, a 30% return is a 30% return. Whether you put in £10 in or £10,000, it's fractionalized. And irrespective of how controlling the institutional money in this space feels they are, collectively, the masses collectively are the most strongest financial entity on earth. And the mechanism of using tokenization in a regulated manner will get us to mass market. There's a lot of things that make me chuckle about crypto. You know, these companies that come out, raise loads of money and think they will beat the regulators and yada, yada, yada. Well, Bitcoin does that because Bitcoin isn't a business. But to take your product to mass market, there has to be, in my opinion, there has to be some form of cooperation and collaboration with the regulators. And it brings positives because it opens up an industry for millions of people that historically have been excluded. But at the same time, we're actually helping. So blockchain is actually helping clean up money laundering within real estate. It's the biggest sector where money is washed. And yeah, by pushing this into the digital space, we're ultimately going to empower millions and millions of people who currently are sat with a savings account or an ISA. It's just a difficult journey because, you know, you're effectively blazing a new trail with the regulators. Another positive on about regulators, the SEC recently said they're open-minded now to the public being allowed, the retail public being allowed to partake in closed-ended fund models, which is effectively what we are. So it's going to be an interesting journey. We're about to get our FCA umbrella in the coming 2 to 4 weeks. Phase 1, we can take this to mass market for accredited. Phase 2 will be a brand new license, which will be ours, which will then open it for the public. But you look at the model on what we're doing. So we've done the private round, which we're allowed to do because we're not soliciting investment. And effectively, everybody is back in the black within just over 3 years. And this is crazy because they're back in the black at the end of 3 years. They still own the digital shares of the business's future profits, like a giant mutual fund. So not only have they made all their investment back, but that digital asset will still yield return every time there's a liquidity event in the real estate. So imagine a world, I mean, where the public are the primary beneficiary of real estate construction. It's a $280 trillion asset class that for decades has excluded the masses. And it's so exciting to effectively have this technology that can bring so many benefits to an outdated sector, but at the same time, get the green light from the regulators so that we can go to mass market. And the DeFi and the CeFi thing, the reality is everything is centralized finance. You look at the recent Poly Network hack where 600 million was stolen. They couldn't get that converted into the real world fiat because all the gatekeepers like your Binance and your Coinbase, they're all centralized. So the gatekeepers are there, and I think it's about playing ball with them to get the mass adoption. Big firm believer in Bitcoin. You know, it is more of just a cryptocurrency. It is a store of value, as clunky as it is. And yeah, and even though this has been around for over 10 years, I still think there's so much more to come.
Yeah, absolutely. And thank you, Gary. And tell me about, people, investing in crypto and making money on it and getting a return for an additional investment. John, you've obviously been busy with this. I mean, how many inquiries are you guys getting a month?
So we kind of launched some information on our website about 6-9 months ago. We're averaging about 150 inquiries a month now, which is a massive amount. The revenue in most things are behind in how to tax crypto assets. They initially, a few years back, came out and said they believed it was kind of gambling and therefore free from tax. And then I think somebody got wise to the fact that actually it was bigger than that. And as a result, they've got some guidance now that is out on the taxation of crypto assets. And it's far-reaching and it covers a lot of areas, and you can be subject to income tax and capital gains tax and corporation tax. And there's even VAT problems with it, depending on whether a service is provided through the crypto. The key problem we're having with clients at the moment, or the key surprise clients seem to find, is that there's a lot of people who invest into the crypto asset, and there is technology out there that allows them to do rapid trading on it. And there is a belief that you only pay tax when it's converted back to a mainstream currency, known as fiat in the market. That's not the case. Where you move and make gains between crypto assets, there is a tax point. So there are lots and lots of gains being made at the moment. We are the people coming forward to us, we're sorting out their tax position, but there's a lot of people out there who are required to do tax returns and return these and pay tax on it. So yeah, very busy.
Yeah, is it the perception that it's an unregulated market, so you can make a bit of money on it and it's not going to get touched?
Partly. It's involving a lot of people who would not have been involved in your classic financial investments previously. I think it's becoming more widespread, but there are a lot of people who've made a lot of gains. There are a lot of people who are otherwise in full-time employment. There are a lot of people who are non-fungible tokens, for example. I've got a client who invested 9 grand and made 1.3 million in 12 minutes selling non-fungible tokens. And there's a whole world of tax issues to do with that. Fortunately, he came to us before he launched, and we were able to put a structure in place. And the difference between that was, instead of paying 45% income tax, he ended up paying 19% corporation tax. His big issue was that he couldn't identify where the purchaser was, so he didn't know whether he should charge VAT on the transaction. And that is a real issue at the moment. And the revenue don't actually need to be that on top of it. If there are undeclared income, the revenue, you've got 20 years to look at it. So it's kind of inherent on people to speak to an advisor early to find out actually what their tax exposure could be.
And what kind of company structures are we looking for when it comes to sort of crypto traders?
So basically, if you hold an asset in your own name and you are trading that asset, I'll go back a bit. The revenue come out and said that crypto as an asset, they think is generally subject to capital gains, unless it's got the markers of a trade. Now, the markers of a trade are sophistication and frequency. And I think they were of the view that most people will just hold it for growth. But most people I'm coming across are actually not just holding it for growth, they're trading it up. So they are finding it, if they're held in their own name, they're finding they're making substantial gains and subject to the highest rate of income tax. If those transactions occur within a company and you're perfectly able to transact in a company, then those gains are subject to corporation tax at 19%. Now, there's a tax charge getting the funds out, but given the gains being made, not that many people are extracting all the funds. A lot of people are leaving it where it is to see if they can actually make further gains in relation to the crypto markets.
It's interesting. And I guess, the advice is, if you've got crypto, you're making money, just seek some advice then.
You really do need to seek some
advice.
Yeah.
And HMRC are doing some work around it, but are HMRC starting to contact people directly? Are they still a bit behind on that?
Beginning to. So there are certain sites that they are aware of that people are involved with, and they're sending what's called nudge letters. So a nudge letter is an indication that you may have a tax issue and you should seek out some help. I get a feeling crypto may ultimately follow what the banking situation was. So at the moment, you can hold a wallet anywhere in the world, and it's not particularly known who holds it, who the owner is. I think there may be more information exchange in future. And once you get that information exchange, if you have deliberately withheld your gains or your income, there will be a significant tax cost. And if it's offshore, up to 200% penalties. So you can be paying the tax and another 200%.
Right, thanks, John. Just moving on to Jim, let's look at the legal side of it. Are there, crypto specific laws at the moment? What can people do if, something goes wrong now, Jim? Sorry, Jim, are you unmute? Can't hear you. Sorry. Can you hear Jim?
Sorry.
Oh, yeah, there you go.
The catchphrase of the last 18 months. So apologies. There is no crypto specific statute, no crypto specific law. Most people listening will be aware it was in the UK based on written statutes and case law, which is determined through court cases which create what's called common law. There haven't been any finally decided court cases on crypto matters in the UK. There have been a number of interim cases which have created some form of guidance which parties can take, but haven't been any finally decided cases as at to date. There's also no crypto specific law been written in the UK. So lawmakers are playing catch up. The likes of Kale, Gary, Josh on this call are streets ahead of the lawyers on how the legal system deals with crypto specific issues. What we're finding we have to do is imply into the advice to clients traditional legal advice based upon the usual notions of how you contract with third parties, how you establish ownership of assets, how you recover assets if something goes wrong, if you have a dispute, if there's been a fraud committed. But the fundamental difficulty with some aspects of implying those concepts into crypto, the crypto world, is that the anonymous, decentralized nature of crypto transactions means that you're often not sure who you are contracting with. And so, although the courts have been prepared to look at granting injunctions, freezing orders to allow people to recover assets which have gone missing during crypto fraud or crypto transactions, it's difficult to know who you're enforcing against, and it's difficult to know in which jurisdiction you're enforcing, because by definition, many of the crypto transactions that are undertaken are undertaken on an international level with parties that you can't identify. So all of this leads to a lot of quite esoteric, intellectual, navel-gazing discussion between lawyers about how we're all going to make this work and what it's going to look like once the lawmakers catch up. Meanwhile, the likes of Gary are actually running a very successful new model of a business, which has a real-world application using the blockchain technology. And that's the interesting nexus for me. You've got, on the one hand, really abstract lawyer discussions about how we're going to regulate this new world versus people actually using it in the real world. We've got a lot of property development clients who are looking at what Gary does because they can see it actually transforms the way they can run their models in a very real way. Those are the sort of inquiries that we're getting all the time at the moment. But meanwhile, we haven't got any crypto specific laws. So it's a very evolving world for us at the moment.
And it's fast moving as well, isn't it? This world.
Yeah.
Yeah. Fantastic. Yeah. Thank you, Jim. And Alex, I'm just moving on to yourself. But what are these sort of the FCA views on this? And people coming to you wanting to do more with their investment. What are people's views on it?
I think with the FCA, they've not shied away in taking action. There's been some major changes over the last 12 months. As of January this year, firms had to be registered with the FCA in order to provide these crypto services. Obviously, if you're personally trading in crypto, it's not a regulated area, so there's no protection. But firms operating in the UK do have to now be registered with the FCA. So Kel and Gary and Josh will have had to sort of overcome this and make sure that they are registered with the FCA going forward. I mean, there was the exchange Binance that a lot of people were using that were no longer able to trade in the UK because they weren't registered with the FCA. So, the FCA are making attempts to regulate this space. Who knows at the moment how much further that will go. I guess as a financial advisor, crypto isn't an area that I specifically deal in, but it's certainly not an area that I'm against. It's a really interesting space. And, as the guys on the call now know, there is a lot of money that can be made in that. But I think the key things are making sure that it's part of a diverse portfolio. I think John's probably come across quite a lot of younger clients who will have put their whole savings into crypto for their kind of deposit on a house. And that might have paid off, but it's a gamble. It's a huge risk, isn't it? If you're putting everything you've got into this sort of space. So it's making sure that you're doing your research and you're looking into the companies, making sure that they are registered. Go on the FCA website, making sure that you're using reputable firms, because that's where you're going to become really unraveled. I was just looking on my iPhone this morning on the stocks and shares app that you've got on your iPhone, and there was a story about Squid Game. So obviously hugely popular show on Netflix at the moment, and there was a Squid Game crypto that was launched recently. Now the creators that have done the Squid Game crypto, I think the price had got up to nearly $3,000 and it's plummeted. I think it was yesterday or last couple of days to zero, because the creators that have created this crypto have basically cashed out. So it's known as a rug pull apparently. So I did some research on this. And they literally cashed out, so it devalued the crypto and it's gone down to zero. So everyone that was invested in this has lost all the money. Now there were some red flags. The website that they had, it was full of spelling errors. You could invest in it, but you couldn't sell your crypto. So it just really highlights, do your research, have a look at people like Kel and Gary and Josh, and make sure that you're looking at firms that are regulated and registered with the FCA, that if sometimes it sounds too good to be true, do a bit more digging. Like I say, I'm not against it, and I've had a dabble myself, but it's just doing an appropriate amount of research and not putting all your eggs in one basket. There was a company called Nerd Wallet that did the research between on about 2018 to 24-year-olds, and they were kind of having a look at what their thoughts were on the crypto market, what the thoughts were on pensions and ISAs, etc. And it was quite interesting, the results, that 31% of them would rather invest in crypto than pensions. And I get that, because it's exciting. And, you know, when you're young and making those kind of returns, you might want to be buying your first house. You probably want to chase those high returns, but also I think more than a quarter of them didn't want to invest in pensions because they were too high risk. So you've got it doesn't add up. And I think there's a huge educational piece in this market, and especially for younger people, to making sure that they're aware of other options that are out there, and you're using certain tax advantages like your pensions, like your ISAs. And if you want to go high risk in those products, but just have a spread. You know, I'm certainly not anti-crypto, but definitely making sure that you're not putting everything into one specific area, and that if you are going into that market, make sure it's money that you can leave it and let it grow. And if it does take a dip, because it's so volatile, that you can afford to just let that money sit there and hopefully wait for that to come back. Because, you know, we've all seen the peaks and troughs of what Bitcoin has done. You know, it peaked at $65,000 or $66,000 a couple of weeks ago. And I think yesterday, I haven't looked today, but it was about $45,000. So the difference of how much that these can drop by or gain in a day is enormous. So it's doing your research.
Yeah, that's the thing about the crypto market. You know, despite its peaks and troughs, the interest hasn't faded. It's still there. If anything, it's probably getting stronger. I mean, would you say that's the case, Gary and Josh? You know, with your businesses, are you seeing that, if anything, people are actually more interested, want to find out more about it?
Yeah, it's an interesting one for us. We've had, the interest has grown as we've walked the roadmap, and there's been various validation points along the roadmap that have stimulated the interest. Because when I first had the idea for Curveblock, everybody just laughed, and it's like, it'll never happen in a million years. And then when you get backed by HMRC in the EIS scheme, and they're like, yeah, this is fintech. If this is going to be regulated, this is innovative, this is scalable. And then people listen, oh, HMRC have backed Curveblock. And then there were other validation points going into various accelerators, being scaled by one of the world's biggest law firms who specialize in real estate and tax, CMS, graduating Silicon Valley, where there were 430 applicants and only 10 graduated. All those little things make people actually pay attention, do some education on the sector, and ultimately start to see that adoption occur. But as I said previously, you know, this is, you look at the birth of the internet, it didn't really become the internet until 20 years in. And although blockchain is apparently being adopted twice as fast as what the internet was, we're still early stages. And I think the entrepreneurs out there that understand how to skin the cat to get this to mass market. Do we like the regulators? No. They claim they're there to protect the public. And that basically means you're allowed to go put £10,000 on a lottery ticket, or walk into William Hills and put £10,000 on the 310 at Ascot, but you are not allowed to put £10 into a security because you're not intelligent enough and you might lose everything. So we have to skin the cat accordingly and dance with the devil to get to mass market. Where will the regulatory landscape be in another 10 years? Who knows? But I think it's a crying shame that there's so many scams out there that are leveraging the FOMO and seeing exactly what was just mentioned, where they raise a ton of, just like back in the ICO craze, raise a ton of money, do the rug pull, because that's really damaging for entrepreneurs in the space that are actually using the tech as tech for good, and really bringing forward innovation, because we all get tarnished with the same brush, a bit like the dot-com bubble. You know, the dot-com bubble, when it occurred, there were still amazing companies that were born out of that, which we all use today. So it has its positives and negatives, but I think the public mindset is very more bullish at the moment than it has been in previous years. And hopefully we won't see a retrace like we saw in January 18, which wrecked all the new people in the space. And they literally, if they didn't sell, they literally had to sit there for 2 years to try and get back into the black, because again, it's a huge negative for everyone that's in this space, whether it's financial advice, mining, whatever that may be. You know, you've just got to knuckle through. But it is becoming more positive, and yeah, the more people that personally understand the regulatory thing, and try and embrace that and implement that into their business, that's going to assist with the adoption. You know, there's so many businesses and all this chanting DeFi, and it's like, if we didn't have the regulators, where would we be as a financial ecosystem? You'd be rife with money laundering and all the dirty money from terrorism and prostitution and drugs, and it'd be like stepping back into the dark ages, or kind of the Braveheart era. And for me, it's about cleverly blending both. Take the decentralized technology, but use it in a manner that we're not all going to be sent to jail, and we can actually innovate and get this out into the public. And hopefully, you know, in a few years' time, this will be mainstream. I do find it hilarious that we're 3 years in, we have all this traction, 30 odd angels, a VC behind us, and the traditional banks still refuse to bank us. And as one of them said, we're not giving you an account because of the nature of blockchain. It's, yeah. How can I say? Adapt or become extinct. And I fully understand why the challenger banks are making so much headway when the traditional banks still hate this space, because it is so damaging to them. You know, you look at us to a traditional bank, we could be the killer of savings accounts, we could be the killer of ISAs, and we could effectively remove the requirement for institutional senior debt for construction, because ultimately, if the public become the financiers, we don't need these capital houses to be the senior debt of the sector. So it rings true with regards to the innovation and how powerful it is for society. But if that innovation brings in 90% of the public globally into something they're currently excluded from, good on that innovation. We're not disrupting, we're simply displacing. We're just allowing everybody the same opportunity that currently isn't there.
And then talk about tech for good as well. I mean, that's one of the sort of strong points we use, isn't it, Josh?
Yeah, no, massively. So, I mean, just to elaborate on what Gary and the guys have been saying, I mean, that's it. You know, in my world, you know, the regulation is, you know, there's no really discussion of that as of yet in the mining space directly. But, you know, am I unrealistic to the fact that at some point, you know, are the governments and the regulators going to continue to let people have a machine that prints money? You know, how's that going to work down the line? You know, so there's all these really interesting plays and discussions to come as things move forward. And I think, you know, going backwards to the kind of adoption that we've seen, I think a lot of people this time round, you know, be it with COVID particularly, and, you know, having the world change around them very quickly, I think it's given people a lot of time and given people a lot of energy to actively educate themselves about the current financial system that we live in. You know, I mean, everyone in the UK has just had the national insurance put up by a good little chunk. which coincidentally is hopefully going to raise the same amount of money that it's cost us for this daft track and trace app, which people can, all share the various successes with, I'm sure. So there's, money is being printed at a governmental level like we've never seen before. And inflation is just running and running away with us. And, I think that, the stats are quite scary. I think America printed something close to 60% of all dollars in existence in the last 12 months. The magnitude of what's going on is really, really eye-watering. And I think people are starting to wake up to it. And ultimately, what people don't realize is if you have your money in your bank account right now, inflation is outpacing interest. You are losing money by having money sat in your bank account. So obviously people have an active interest in trying to find ways around this. And obviously blockchain and crypto offers different options that people haven't seen before. And I think a combination of all of these factors are playing very well. And, I too share Gary and Jim's kind of attitude is that, I don't think it's necessarily a good thing that we can just look to crypto as this pirate ride off in the sunset, see you later tax man, we're going to do our own thing, because ultimately we need to form a civil society, right? And things have to go hand in hand. But there is this big difficulty at the moment between, getting a normal bank account. If you have crypto in your UK limited name, zero. You do anything with crypto, it's very, very difficult. And ultimately, other countries in the world are dealing with this much better than the UK is. And on such a global and international stage, it is prevalent that the regulators really, get the right people involved to get some sensible clarifications around this, because, there are people on this call, myself and Gary and all the guys on here who are kind of just doing our best to create these new businesses and employ people and grow companies and, create value for the world. But there is a little bit of kind of making it up as we go along at the moment, not for lack of wanting to do the right thing, but because we are treading those new paths that haven't existed before. So we just hope that, I guess, our actions will be looked at fondly as these things are developed over the future, because we're just kind of figuring it out as we go, which is on top of however difficult it is to start a business anyway, an extra difficulty that, most entrepreneurs outside of this space, it's just something that isn't needed to be considered at all.
I'm saying, you guys, sort of like, doing the best you can and sort of making it up in a good way as you go along. How long do you think it'll be before, the sort of the legal side, the finance side sort of catches up and, we're working as, a one sort of regulated unit?
Yeah, good question. I mean, I've been asked to do some advisory work for the EU Parliament. So I was over in Brussels last year, helping speak with some members of the Parliament over there to try to educate them to these things. But the problem that we have, and this is a general rule across the board, is that it seems to be the people that are in power within those respective organisations simply aren't of an educational level to really understand what this is. They may have heard of Bitcoin. Well, if you're going to make regulatory policy, you need to know a damn sight more than hearing of Bitcoin, right? It's a bit more complicated than that. Ethereum's not a currency, it's a smart contract. Well, you're into a whole different world in 5 minutes flat. So the education's a real problem, and I think that needs to be worked on. And I think that's probably more so going to have to come from, our community, the crypto and blockchain community. And I hope that, the regulators look more towards the people that are actively involved in the space to assist in that process. And I'd like to think that, a lot of us on the call would be willing for that type of thing and are all in the same space. But there just seems to be a massive attitude at the moment of sticking a square peg into a circle hole. And again, people like John are trying to pick up the pieces through this tax system as we go. So I just hope, that the powers that be are quite forgiving and quite willing. If it was that HMRC or anyone, really harshly punished people, say for the tax that was or wasn't declared this year, for example, that would arguably be over harsh, because there's actually a very large proportion of accountants themselves that don't even know quite how this works yet. So it's a case of, hoping that there's some reality, hoping that there's some fairness, and hoping that the people that are in the space can work with those regulatory bodies. And, it will take time and it will work itself through. But ultimately, if this is such a fast growing asset class and there's some great money to be made, I would hope that the governments around the world can look to this as an advantage to help again, grow their economies in different ways. And in theory, there's enough in the game for everyone to move in a very positive direction. So, you know, I do certainly hope that's the case, but I think that's only going to work if the powers that be actively engage within the community. And my only concern is that perhaps hasn't happened to the extent as of yet that it should have done.
It is an interesting space when you start looking at sentiment from different governments in different jurisdictions. So we've obviously walked our roadmap in the UK in stealth mode, which is how it has to be done until you're regulated. But during stealth mode, we were approached by the Canadian High Commission, which was just like, wow, we're a startup and we've not even gone to the public yet. And we're in meetings with the High Commission of Canada to basically, they want to work with us to roll out what we're doing, both on the fintech side and the real estate side throughout Canada. And I think this will be an interesting space with regards to adoption, because obviously you've got some jurisdictions where it's ultimately getting banned, like China. And then you've got other jurisdictions like Canada that's really bullish and they want to accelerate the various innovations into implementation and real world products. And then you've got the little guys like El Salvador saying, you know, screw the US dollar, we're going to go all in on a digital currency. And it's all these little individual events that will ultimately, like the Blue Touch papers, and see that adoption start to occur. And then it's because sadly with the regulators, they all typically seem to watch what everyone else is doing. There doesn't seem to be many that will say, right, we're drawing a line in the sand. We're going to allow adoption if X amount of criteria are implemented. You know, the SEC will watch the FCA, the FCA will watch the SEC. It's like, it's ridiculous. But I think as we continue to see things like the Canadian High Commission wanting more blockchain rollout and adoption, and some of these smaller player countries make that transition into digital currencies, it's effectively going to be a dam wall effect. And as those initial early bricks are removed from the dam wall, it's only a matter of time before effectively that is accelerated globally. You know.
Yeah, it's definitely an exciting market, and you know, shows lots going to happen even in the, you know, by the end of this year. But you know, fact is, it is still unregulated at the moment, and you know, what is the safest way to invest in crypto, and how do people, especially consumers, protect themselves legally? I mean, what can they do? Maybe Jim, John, you could like talk a bit more about you know, what they can do themselves.
If you're a consumer, I think employing some basic common sense in the same way you would if you were buying anything else or investing on a normal stock market, invest through a reputable exchange, a known exchange, and don't be taken in by phishing or scam emails, which are just employ the same methodology that you're expected to employ when you receive any other scam email. There's a lot of one of the reasons why, as we've been talking about, the regulatory framework is still up in the air, and the UK authorities seem to be a bit in the headlights about this, is that clearly everything we're talking about on this seminar is based on an environment which is really rife for fraud and crime. It's like taking candy from a baby, stealing from people in this world, and so inevitably levels of cybercrime associated with this environment are high. Just employ common sense. It's a very trite thing to say, but use reputable names. If it's too good to be true, it probably is. If you're buying something, whether it's a crypto asset, which is currency, or whether it's an NFT or any other kind of crypto asset, ask yourself what you're getting. And what rights does it come with? Just ask yourself the basic questions. And if you don't know the answers, go and get some advice. But don't just, unless you've got money to burn, which none of us on this call probably have, employ some common sense. What are you spending your money on? That's what I would do.
And John, you're going to say something.
Yeah, I was following on from what Gary said. And I deal with the tax legislation, and I think the issue with the legislators and the regulators is the fact that, and it's been the issue with all internet-based businesses, regulation is made on a physical, geographical basis. And these assets are highly liquid, highly mobile, and recognized worldwide. And so one territory can regulate or innovate or bring in a set of legislation, but there's a lot of anonymity around it. And so they can do their best. At the moment, I don't think they know what to do. It's too early, too new, and governments are cumbersome organizations. I would agree with everything Jim said in terms of using common sense. I had a scam arrangement recently whereby somebody said they'd invested in Bitcoin, and then the provider asked them also to send over a payment for the tax on the Bitcoin, because they wouldn't release the Bitcoin until they paid the tax as well. And it was like, they're not responsible for your tax and they've just stolen your money. Maybe another method is reputable exchange, and make sure you invest directly into the asset as opposed to going through a broker organization that you're uncertain of. The other thing from a tax point of view is you're required to self-assess. So it's your responsibility. It's not the government's responsibility. It's yours to return your gains.
That's very sound advice. And moving on to yourself, Keld, you've spoken about the future of crypto and blockchain. I think you've said previously that you think it's going to create trillions in value in the future. What's your sort of view on the future of this market?
Well, I think what people don't really realize is that, this technology allows people to strip out the sort of rent-seeking middleman, the sort of the thing that people are being overcharged. They have their privacy violated. All these things are squeezing the consumer and the individual more and more. I mean, the actual internet was a kind of technology that was not supposed to have a middleman, but we just ended up with this sort of middleman sort of layer, and this new wave of non-centralized technology allows us to readdress that. So I think you've got really exciting new services that we haven't even dreamt up yet, but there's just in the last couple of months there's been a new service to readdress the carbon market issue, to try and create a stable standard for the carbon market. So to create a sort of a global recognized on-chain metric for how much a ton of carbon is, and then to create a sort of black hole for carbon to try and get everyone to join in that initiative to drive the price of carbon up, so companies don't want to just acquire more carbon. That's actually working to some level, and that's doing very well. And you've got things like ether risk, which allows farmers in Africa to insure their fields for the first time. So that's through smart contracts where they can just, a weather oracle can check the last 30 years of weather in a field in anywhere in Africa or the world or India. And they can just do a smart contract. They can pay in a crypto, and they can get, if there's a weather event in that field, they can get an automatic amount of money out. So this type of technology without a middleman, it's just automated software that's verifiable because you can't tamper with it, is extremely exciting to create new types of enterprises that are just much fairer for everyone. And I think so. It's not just the money that's fairer, because it's not being overinflated. So we've got fairer money that's you can now do programmable things with, and those two things are just extremely exciting for the future of our lives, really. And I think as much as the internet created trillions in value, we're going to see much more value being created with this internet of money and finance, and it's going to leak through into everything, really. So just look at the way NFTs are changing artists' lives. They can now make a living out of things. There are So I think, you know, we've got worlds that we just don't know the impact on, but it's for the good of, you know, all of our lives really. And for KO1, I should give a sort of what we do. We invest in those companies and those layers very low down. And we get to invest in those opportunities where other people just don't get the opportunity because these projects do an investment round with a bunch of crypto funds because it's safer on the regulatory side. They don't want to take lots of money from lots of individuals, which is sad on one hand, because that was much fairer way of raising money. In the old Ethereum ICO days, everyone just shoots a meter to a wallet address and gets some tokens back. That we all loved that because it was fair and it got rid of investors, but regulators didn't like that, mainly because it was abused by people doing kind of running scams. So these projects raise money from funds. We're one of those funds. We're one of the top funds in the world that invests in sort of the highest quality projects. And you know, we're investing in a future of a kind of an online world, which is going to be fairer, hopefully, and it's going to be more inclusive and more protective of people's privacy. And, you know, I think those are all very important things as we kind of move forward in this kind of quite confusing world. So, you know, it's a very confusing time and quite scary. Technology can get us out of this hole. Every day we see incredible projects and gives us much hope that there is you know, there's hope out there to fix things like climate change and the sort of, you know, the way the financial system is just feels very unfair to people. And I think those key things are going to really, there's as much as we can do now, basically.
Yes, we're coming to a close this seminar, I think, yeah. But if there's any final comments from our panelists before my final comments? If not, well, it's been definitely an interesting hour. I think it's a very exciting space. I think we're going to see a lot more from it. I mean, one thing that's come out from the last hour, there's definitely a lot of innovation taking place and a lot of tech for good, which I don't think people sort of put crypto and that together often. And there's still a lot of education around it, but it's people like our panelists this morning who are definitely helping in that space. Can I say a big thank you to Alex, Gary, Keld, Jim, Josh and John for their time this morning and for your invaluable advice. There will be a write-up about this on thebusinessdesk.com, so do please watch out for that. And thank you for all your time and thank you for watching this morning.